Hello, ladies and gentlemen. This is Thomas Frost with Frost & Frost Wealth Management, where we attempt to be the antidote to the pundits of pessimism and the wall of worry. As always, please make sure you read the disclosures that were attached to this video, or if you happen to be watching on social media, simply go to www.frostandfrost.com and read any of the disclosures that you might find therein. So if you happen to be watching the news, then you know what the pundits of pessimism are focusing on. Once again, anything negative. So we're hearing a lot about the Russian-Ukraine conflict, inflation, higher interest rates. We'd like to call these the wall of worry. But here's the thing about those walls. Number one, they're temporary. Number two, we've been there before with each of these three things, albeit maybe not all at the same time, but we have been there before. And we have an understanding of what happens when there's geopolitical events like what we're seeing in Russia. And we know what happens historically when interest rates rise and we have high inflation. So it's important to remember that. And then the third thing is that time in history is a great regulator. As Mark Twain famously said, history doesn't repeat itself, but it does rhyme. And I think that's kind of the thing to remember, the takeaway from this commentary. Yes, the stock market feels pretty schizophrenic these days because, per usual, it's trading off the headlines. Here's what we know, though, that can help keep this in perspective. Number one, economic fundamentals right now are extremely strong. We often talk about the 20 leading economic indicators used to take the economy's temperature. Right now, 11 of those 20 are positive. 8 are neutral, and only 1 is negative. You can probably guess which one that is: geopolitical risk. The thing to remember is that the economy is what drives long-term growth and stability, and the economy is strong. Now, sometimes the markets can act irrational. So that's the reason we focus on the fundamentals of the economy. Number two, we knew this was coming. Everyone knew entering this year that we'd face midterm elections. Nothing can make the market more antsy than an election. History shows us that the market can see up to a 17% correction in midterm years. So once again, we've been here before. We also came into this year knowing the economic cycle was aging and expecting to see a correction. Why? Well, because last year we only had a 5.2 correction, intra-year correction in the entire year for the S&P 500. That's extremely low volatility. We normally see about a 14% intra-year correction. The thing about those years like we saw last year where the market's pretty stable is that typically the following year we see a lot more turbulence. We're seeing that this year. And last but not least, we all knew the Fed was going to raise interest rates this year. And we're experiencing some jitters as the market takes on their sea legs. The only place consumers run from when things are on sale seems to be the stock market. Anything else goes on sale, they want to buy. At Frost & Frost Wealth Management, it doesn't really make sense to us, especially because we're in a territory we expected, and we knew this would be coming with history ringing in our ears. So what we're trying to say is take advantage of sales. Ignore the nonsense and remember that fundamentals don't lie. Remember, we're long-term investors. We're not traders. If you have any questions, please feel free to reach out to our office, 352-205-7800. Have a wonderful week.